President Trump sharpening his tone on China while his trade team fires back at Beijing's latest tit for tat.
It's a clear repudiation of everything we've been working toward for the last 6 months.
We want to help China, not hurt it. If some in the Chinese government want to slow down the global economy through disappointing actions and through economic coercion, the Chinese economy will be hurt the most. And make no mistake, this is China versus the world.
Welcome to the Big Money Show. I'm Jackie DeAngelis, along with my co-hosts Lou Bassanese, Lauren Simonetti, Brian Brenberg, and with us for the hour, Renmac Head of Economic Research, Neil Dutta. Welcome. Great to see you. China announcing new port fees on U.S.-owned and operated ships this week, its latest retaliation in an escalating trade fight. But the president is firing back.
We have to be careful with China. Look, I have a great relationship with President Xi, but sometimes it gets testy because China likes to take advantage of people, and they can't take advantage of us. But we have a fair relationship with China, and I think it'll be fine. And if it's not, that's okay, too.
Those comments sent stocks sharply lower on Tuesday. We're rebounding today, but investors are following every single word. And Neil, I want to get your take on this, because while investors are watching the back and forth between President Xi and President Trump, this is not like Liberation Day. There's a certain amount of understanding here, and the markets can get spooked, but then they rebound and they realize this is part of the president's negotiation tactic to a certain degree. At least that's how it seems for now. What do you think?
Well, I think in any negotiation, you have to show at some point that you're willing to shoot the hostage, and and I would just say that, you saw the Wall Street Journal article this morning, right, talking about how the Chinese understand that the stock market's the Achilles heel for the president. So, I think that's really the pressure point, and I think at some level, President Trump showed some of his cards, right? I mean, in April, we had the Liberation Day announcement. The tariffs on China were ratcheted up, and we kind of unilaterally came back from that without much to show for it, right? So at some level, perhaps the Chinese understand that he's not really serious about the 100% tariff that he's talking about on November 1st. So I think if you're an equity investor, you really have to think about how willing do you think the president's going to be to actually shoot the hostage? I mean, there's this big belief in taco and he's going to chicken out, but what if he doesn't?
Right.
What if he actually means business? I mean, this is part of a negotiating strategy that's typical, which is he just negotiates in public. He kind of says, all sorts of different things. I mean, if it works out, fine. If it doesn't work out, fine. I mean, so I think it's really hard to know. I mean, I guess the best thing you could say, it's good that it looks like they're on track to talk. Right? Yeah. Talking is probably better than not talking.
You never know what this president is going to do, and
right.
I think that's certainly a fair point. He does sprinkle a lot of different things out there, and then the outcome ends up where it ends up. But Lou, Neil brings up Liberation Day, the market reaction, which we all remember. It was the bond market reaction that really got the president's attention when yields spiked all of a sudden. We're looking at a 10-year at about 4% today. So the bond market is holding steady, doing its thing. Nobody's panicking. And I think as long as he's got the 10-year yield around 4, he'll continue the dance.
Yeah, no, I agree with you. I think the president's playing a chess game right now, right? The first pawn that he wanted to get to move, was Jerome Powell on interest rates, and that's happening, right? We can argue whether it was because the labor market's cratering or there was pressure there, but now I think the president has that leverage in terms of the bond market, right? The bond market's moving in his favor. He can be a little bit more aggressive with China on the trade talk, but I mean, I'm with Neil on this. We all know that we're going to come to an agreement. We're just figuring out the cover charge to do business in each country right now. We know what's going to happen. We're just too tied to each other. We have to figure it out. But uncertainty stinks if you're a stock market investor and you're not used to the volatility. I think you have to have cash on the sidelines to take advantage of these swings. I mean, we had a huge swing from Friday to Monday. If you were just riding it out, you missed a lot of opportunities, and you got to expect more of that. But from politics and political theater, the volatility and the unexpectedness that's the art of a true negotiation and using your leverage. So you have to expect more of it.
Yeah, and Brian, we've been talking about this for a few days. The two leaders are both playing hardball. Xi is not rolling over here, and he certainly hasn't done that or made any signs of capitulation. He's going to take it right down to the wire whenever the two sit down, have a conversation over the phone, in person, whatever it ends up being. Everybody wants to come out probably with a couple of their sticking points on top. I think both sides know they won't get everything.
Yeah, I'm going to stick with the chess metaphor. I like that metaphor. This reminds me of sometimes you walk around New York City, you see guys playing chess on those tables out in public, you know? And when you play chess with a crowd, I think it causes you to play a little bit differently than if you're just playing one-on-one. These guys are playing chess with a crowd right now, and they're going to meet in less than 2 weeks. And I think, Neil, you're right. The fact that they're going to meet is what's important here. They're making moves to show the other side what they can do. I don't think either side wants to go all the way to full-on decoupling, full-on trade. Even Scott Bessent said that. We're not looking to decouple.
I'm glad you brought that up. Can we play the soundbite?
Yeah. Good.
Actions have once again demonstrated the risk of being dependent on them on rare earths, and for that matter, anything. If China wants to be an unreliable partner to the world, then the world will have to decouple. The world does not want to decouple. We want to de-risk. But signals like this are signs of decoupling, which we don't believe China wants.
Let me be clear about what I think de-risking versus decoupling means. What decoupling means, the way he's saying it, is everybody just pulls away from China, okay? They don't want to do that. But I think de-risking has to mean decoupling in some really key areas. And I think rare earths are one of those. China has leverage there. There's no question about it. U.S. politicians gave away the leverage we had decades ago. We have got to get that back. You don't go forward with China dependent on them for the things that make your military run. Sorry, but you can't do that. They're right now wanting to catalog every single use of rare earths we have in our military with these export controls. It would be a mistake to give it to them.
But you know what our leverage is?
What?
I mean, they have the rare earths, but Edward Lawrence asked the Treasury Secretary a question today, and the Treasury Secretary said, well, I remember when we were speaking a few months ago in Geneva, and we had the 145% tariff threat. That moved them. Next week,
They were phased.
They were phased.
They were phased.
Starting on Monday, you have the big Chinese Communist Party. They're meeting. They set their 5-year plan. How will President Xi signal what he intends to do? Because when you think about it now, China is not a consumption economy. They're trying to export their way, increase their factory speeds to get more product out to the worldwide market where they're #1 customer for their goods. Are they going to somewhat hint at a change to that model where they can increase their own consumption? Yeah. Because right now they're just flooding.
But that was a story like 5 years ago when you had Chinese GDP growth well above 5%, trending towards 10%. I think you're seeing, you got to trust but verify the numbers. Their domestic economy is struggling, so that consumption-based catch-up is not there. So I think they're losing leverage there. I mean, Neil, you probably look at some of the economic data coming out of China too, and have a better perspective on how it's on thin ice in certain areas in terms of real estate investment, youth unemployment.
Yeah, I mean,
Bessent used the word depression.
Well, I think Secretary Bessent's onto something, as he always usually is, but. The Chinese had a blockbuster export number this week. Now, those goods aren't coming here. They're going, we have a tariff wall up to some extent, right? So a lot of the goods are leaking to other countries. They're dumping their goods on these other countries, eroding their own industrial base. That's why I think the administration or the country, our country, is on firmer footing now against China, because we can corral allies, because it's like, hey, all these goods are falling into your markets. Do you want all this stuff? So China's problem is that they essentially have very, very weak domestic demand, which is why all their exports get dumped everywhere. I mean, they don't have a lot of internal sources for growth, and that's part of the problem. So they're growing, in my opinion, at some level at the expense of everyone else. I mean, to me, the nuclear option isn't tariffs. I mean, America, we have the commanding heights of the financial system in the world, okay? We have the reserve currency, we have the dollar, we have the best companies, the stock market, all of that. The way to hit China where it hurts is really to threaten to delist their companies from our exchanges, okay? And I'm not saying that we should do that, but I don't know. I mean, maybe Secretary Bessent wants to draft a memo to tell us how that might work.
Nuclear option. Let me ask you this. We've been talking about AI's role in all of this, with President Trump forging forward and allowing AI companies to flourish here. He wants us to dominate globally. China wants the same thing, but they're a little bit behind. And so as Xi sees President Trump allowing AI to flourish in this way, do you think that he's worried about that, realizing in time that will erode China's power position?
Yeah, I mean, this is all new technology, right? And having all I can say with we have the best companies that are doing this. So it's important for us to make sure that continues. And it's also important for us not to do what we did in the 2000s, which was essentially seed our industrial base to that. I mean, with these like joint ventures and things like that, that we now know in hindsight that was a huge mistake.
And it started earlier than that, too, by the way. I mean, the 2000s was a big part, but we started seeding. If it was environmentally unfriendly and we wanted to regulate it, we said, well, we won't do it in the United States anymore. We'll send it. We'll let China handle it.
Yeah, but that's key to AI now, too, right? It's not about the chip technology. We're ahead in terms of innovation. But AI can't keep expanding without energy. And one thing that China has not been behind on is expanding their electricity generation capacity. They've been with coal-fired power plants, over 300 coal-fired power plants opened in the last decade or so. I think the stat is, if you look at global use of coal for electricity generation, everywhere in the world, mostly in China, but everywhere except the U.S. is going up and to the right. The U.S. is down about 66% in the last 25 years for coal production. So China's got the critical resource. We talked about rare earths. They have the critical resource to fuel this AI trend. So they may have subpar technology and chips that they got to do it with, but they got the power to make it happen.
All right, let's leave it there and take a look at something else that's driving the market today, more bank earnings. Take a look at Bank of America beating expectations. Profit rose there 23%, $8.47 billion, thanks in part to strong results in its investment banking division. Strong bank earnings this quarter continue to be a good sign for the economy. Thoughts on the banks, Neil?
Yeah, I mean, I'm generally more on the cautious side of the consensus, to be honest with you, in terms of my economic outlook for the U.S. That being said, yeah, I mean, the bank earnings are what they are. It's spectacular. I mean, you have to just ask yourself whether you think that's a sign of things to come or more a reflection of what has been. So we can talk a little bit about the risks later, but I mean, bank earnings have been strong. There's no doubt about that. The issue is, I mean, a lot of them are also talking about very strong growth in consumption. And so I guess for investors, you have to kind of tease out whether you think that's a signal for what's happening in the future or really just an indication of where things stand at the present.
I see the read through here as being really positive because estimates for this quarter are for 8% earnings growth for the S&P 500. S&P 500 companies have beat those estimates 37 of the last 40 quarters. So it means the other earnings growth coming from big tech is probably going to be higher. We'll probably get a number closer to 12 or 13% for this quarter.
And as the government shut down, we don't get economic data, but we're hearing from the biggest banks in the world and commentary from their CEOs. And for the most part, they're saying everything's okay and the consumer is holding up, especially when you hear from the ones with huge consumer lending arms like a Bank of America, right? They said every line of their business improved and the consumer is hanging on and doing okay.
All right.